Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at Finance, and if you want to join our community, finding-value.com, that's where I dive deep into all the investment opportunities that are out there. I'm usually a cycle behind. I should say, sorry, I'm a cycle ahead of most people. So when I'm buying something, no one's talking about it. There's very little interest, generally putting in a bottoming pattern in a sector and companies. Then a cycle kind of behind, we'll call it. Silver, gold, it's ripping. So I've allocated to the stuff that's moving. I've had to wait a little bit for that to really get moving. And now I'm allocating to new sectors that people aren't talking about generally on YouTube or Twitter. I'm talking like under the radar stuff. People are not looking at this. We've already positioned in rare earths, lithium, gold, silver. I'm talking more about sectors that people don't like and they can't figure out, well, I don't know why that would go up. If they've got bottoming patterns, if they're being accumulated by smart money, that's where we're going. If that sounds interesting to you, if that's something you want to learn about, sign up. Use special as the coupon code. You can get $25 off the first month only on the monthly membership, and you get a $100 discount on the yearly membership, making it $500 a year. And you can always swap from a monthly to a yearly membership if you would like to do that and get that discount. So Eric Yoon, it says the bullion banks just stopped leasing physical silver to each other at reasonable rates cold turkey. JP Morgan pretty much stopped the lending of shares of SLV to redeem for physical silver. The entire paper physical system, silver system, seized. Who was the first? It is a hell of a lot easier just to be first. So I'm not getting too tied up in all the narratives here. I've already positioned. I know some people say, well, how does that help someone who's listening? It doesn't. It doesn't help them. You should have already been positioned, is what I'm saying. And my whole point is you have to buy stuff when no one is looking. It's a hell of a lot easier just to be first. First. And then you wait. You have to have patience. It's part of the game. So when people ask, well, how's that going to help you? I'm not here necessarily to help you on every single sector. You have to be able to get in when the opportunity and the window is open to get in. Now everything is seizing up, perhaps. How bad is it going to be? I have no idea. I don't think anyone knows what's going to happen. A lot of people say, hey, we've got a bunch of physical metal in America and you can get it at discount. Well, let's buy it on discount then. Go get it if you can get it at discount. But you know what? There's a shortage of 1,000 ounce bars and they can't convert the metal into 1,000 ounce bars. And what determines the price of physical metal and in the futures market? It's 1,000 ounce bars. It's not 1 ounce rounds at a local coin dealer in America only. So you gotta get when the window's open, when the opportunity to get on the train is there, you get on the train. Now that we've got this 45-year cup and handle break into the upside, these JP Morgan and all these freaking banks were playing hanky panky with the physical metals. I don't know how this turns out. I don't even know if the futures market is a viable way to price silver anymore. Who knows? I mean, if we don't have the physical to back up the futures, then what the hell's the value of the futures? So difficult to say. Now, I'm not going out and running and buying a bunch of physical metal. I'm going and buying stuff that's cheap. I did this with silver back in 2018, 2019, 2020. No one gave a crap about it. People made fun of me because I like platinum and it hadn't gone up for 14 years. I bought a whole bunch of platinum. Go tell me how easy it is to go buy a whole bunch of platinum all over the place at cheap prices now. Go look at the premiums. Premiums are all getting jacked up on some of these metals. You get in when no one gives a crap. That's how you pay the least amount of money. Then you sit and you wait. It is a hell of a lot better and easier just to be first. Latest oil market supply demand outlook from IEA is a doozy, projecting an almost 5 million per day surplus in the first half of 2026 if OPEC Plus holds firm to current policy. This very likely won't happen because prices will force a supply adjustment, probably from OPEC itself. Do you know how much faith I have in this chart? I have zero. In fact, it makes me think that the IEA is a fraudulent enterprise. I don't think that that is at all going to materialize in that manner, in my opinion. Now, it's not because I'm bullish oil, it's because I don't see evidence of OPEC shipping more oil. I don't see evidence of where this oil is located. Now, if there's evidence that comes up in commercial inventories and stuff like that, well, then I would say, okay, well, maybe it could be right. But I don't see any evidence. So it's hard for me to swallow this one, guys. Here's Anas. He says, we predicted in our report that OPEC plus crude supply in October would be lower month over month. So far, so good. How the heck can we have crude supply going lower from Saudi, but have this type of projection at the IEA? Do you know who works really close with the IEA? The government. Interesting. Maybe there's something going on there with lower oil prices wanting to occur here. Coming down, the oil market's backwardation is fading, and 2026 contango looms. WTI's entire 2026 curve now trades below $60 a barrel under most shale break-evens. Executives at Total, Energize, and Vital warn prices this low could cut U.S. output by 200, 300,000 barrels next year. So that's going on, and I'm just trying to make ends meet here on the information that's being released in the oil markets, because a lot of stuff doesn't match. And I know Trump and Vicent want oil prices lower, and I can't match the data with some of these news releases. It's like, that doesn't make any sense. There were people calling silver overbought at north of $25 an ounce. I didn't enjoy it, but I kept buying at 28, 30, 32, 35, 40, 45, and I'm still buying at 52. I know what's going on, and maybe he's referring to maybe a hyperinflation or the physical squeeze that's occurring at the LBMA and COMEX, and what JP Morgan's doing with SLV and all this other stuff. I'm not exactly sure what's going on, to be honest, myself. You could read a lot of information. Mostly the news is just filled with trash anyway. So the chart's there. It's a 45-year cup and handle. We're breaking to the upside. I loaded up when I should have. I've done everything I could. I have not purchased any physical silver above $25 an ounce. That was my last purchase. All of it's been underneath, I think 20, maybe it was 24. I don't know, it's 24, 25 bucks, somewhere in that range was my highest purchase, and I don't own a lot of physical metal at that price. It was all purchased at like 15, 16, 17, and 18 was the majority of it. So how does that help you? Well, it doesn't help you. What it does help is if you're part of the website, I can show you sectors that are that cheap, where you should be buying really, really cheap and not chasing prices, like silver here. Now, I still think silver is going to go up, but your risk reward continues to change as the price goes over the cost curves. So if your cost curves are down at, 30 bucks an ounce or something like that, now you've got, you're above the cost curve. That means a lot of stuff can turn on in the world to produce silver. So now it's a race, but that might take many years. It might take many years. Descent on supply chains. He says rare earths going to do equivalent of Operation Warp Speed to tackle processing. Okay, so basically he's coming out, they're going warp speed on rare earths. So perhaps rare earths could go warp speed to the upside. We've positioned for it. Does that help anybody? No, we haven't. But you know what? If you're part of the website, you maybe could have positioned in a few of the rare earths and maybe the ETF that we're in. So it doesn't help the viewers that are listening at this exact moment, but there's sectors right now that are down right now. Perfect. And I'm not going to talk about them because no one's talking about them on Twitter. They're like almost, I mean, I've talked about a little bit, but it says, are there actually any coherent theories about why the metals are bonkers besides buyers are more aggressive than sellers? Or two, the system is technically speaking all messed up. I really am looking for a serious and informed answers on some seriously funny crap, not just guesses. Well, you want to know the real answer? We are coming into cycle where interest rates going up means that the bond market is selling bonds. And when interest rates hit about 4.5%, 5% and go above that, people start selling stocks. So if bonds and stocks, equities, NASDAQ, crypto garbage at the top of a bull market, and S&P 500 and Dow Jones, if people are not buying those assets, where do they go? They go to commodities and they go to precious metals. So the banks are probably accumulating because they know the cycle. And everyone else has no idea what the cycle is. So what I've done is I've positioned for this cycle from 2020 till 2025 today and bought the bottom out of all of these different sectors. I bought bottoms everywhere. And I just sit and I watch everyone trying to figure it out while they mess it all up. Now it takes time for people and their ideas and abilities to figure out, like, whoa, something's changed. Why does it feel different? And then finally, when losses start hitting the accounts of people who own bonds and stocks, they're going to chase price performance. So then they're going to FOMO into the crap that I'm already in. I was there first. I front ran the whole damn thing. All you had to do was look. You had to figure out how to not be a linear thinker, but be a lateral thinker. A lateral thinker anticipates differences in the future. Linear thinkers that they look at the price history and say, oh, it's gone up for 5 years, it's going to go up another 5 years. That's linear thinking. Linear thinking gets you basically that whatever happened before is going to continue into the future. A 45-year decline in interest rates, or I should say 40 years, has changed. And that is changing the money flows in the system. And if you can identify that shift or that bottom in turn, you can make ridiculous sums of money. And then all you have to do is you buy at the bottom and you sit and wait for the money flows and the people. The people being subjected to higher inflation rates, people being subjected to higher interest rates, and them to finally start changing money flows. It just takes time. You need to understand that as an investor, that you get in, you position, and it may take a little bit of time for this to all play out. As people realize, whoa, I'm not positioned correctly. Losses hit the account as interest rates go up. Then they say, I don't want to be here. I want to go buy whatever. And then they go chase price performance over on gold or silver or uranium or whatever the heck it is. It doesn't matter. It's all over in commodities. And then it just repeats over and over and over, the cycle. When commodities get really expensive, it'll repeat with equities because then people will sell off equities. And then in 10 years or 20 years or somewhere between those two numbers, we're going to buy a bunch of equities and do it all over again. So that's what's happening. And the reason it's going up so fast is because they printed so much damn money and it all went into financial assets. All of it did. And when that unwinds, you're going to see ridiculous moves in gold, silver, and oil, and all of these other ones. They're going to go up substantially because the money has nowhere else to go. And depending on the psychology of people in the herd, if they get scared, money will move even faster if you scare the herd. This tone is starting to gain more of an echo lately. So it says why U.S. shale oil growth is set to get far more expensive. And here's some data. It says well productivity year over year, 3 years smoothed, and real development costs, $2022 per barrel of oil equivalent. So they're using $2022, the year 2022. That's called discounting cash flows. So you go up, goes up. That was 1970s. We have another turn. By this metric, the growth in productivity peaked in 2019. And we're probably going to see development costs rise way up again. So we're seeing development costs cycle up, down, up, down, up, down, up. We're going to go up again in development costs. Here's one. I can't pronounce his name. Good luck. The truth is, this is the fakest bull market on record. The copper to gold ratio is at an all-time low, while the Dow Jones is near an all-time high. This gold bull run is more than just one asset climbing. It's a warning signal that modern monetary theory is over. And I'm also seeing these correlations. They're the lowest correlation ever down here. I am seeing some of these correlations break down, like yields and oil price. That's another one that's breaking down to some degree. They generally move together. Another one, if you're wondering why the silver miners are struggling here, this is it. SILJ divided by silver. Sitting right at the top of a 10-year channel, a clean break above, and there's 40% air before we even touch the next long-term channel. So we're at resistance. Some people were asking, well, why are we slowing down? How come the silver juniors are not keeping pace or going faster than silver itself? We're at resistance and we just have to break through. Give it time. Patience. Patience is great for those that are well positioned in the market. For those who don't know anything about what they own, time in the market can be a killer because they have no idea what's going to happen. Now, I'm not saying what's going to happen in the short term, but if you know what you own and you know it's really cheap and it's coming into cycle, there's no better feeling than just sitting and waiting for this to all unwind because you know where it's heading. I mean, imagine if we do have a problem with the futures market. What if we gap up like $20 an ounce in silver in a single day? What's going to happen when we start breaking through some of these resistance areas on the junior mining companies? Is it possible that we could see 40, 50, 60% up days in junior companies? Maybe. I don't know. But I'm there to find out. I'm in it. I'm riding it. I'm going to find out what this thing's got. So I'm less concerned about when something occurs. I'm less concerned about, oh, it's not going up in the short term. We're breaking a 45-year cup and handle, guys, on silver. Slap yourself in the face. Tell yourself, hey, you know what? This doesn't happen that frequently. I'm going to get in. I'm going to position. I'm going to sit. What do the charts look like? All these juniors have fantastic setups. Fantastic. Oil companies have fantastic setups. Iron ore, lithium, rare earths, they all do. Where you gain confidence is you kind of figure out what the patterns look like. You see when they break, You look at the market conditions, you look at interest rates, you tie this all together, and you're like, oh, I know where this is going. But you don't know in the short term. You don't know when Trump's going to tweet about a tariff increase on China. You're going to have to endure it. You're got to ride through it. It's not going to stop the big trend. The trend is up, guys, for a lot of these commodities and precious metals. As prices move up, people gain confidence. And then your asymmetry dies a little bit. It decreases. So as this unwinds, as we go on up in silver juniors and silver price, your asymmetry declines. And you know what happens with the general public? They get more confident. They get more confident because they see the price going up and they want to FOMO into it. Oh, the price is going up. That means silver's in trend or whatever the heck it is, whatever they think. That's not the time to buy it if you're a professional investor. Coming down, it's obvious, but let's spell it out. Big oil bosses, recently the CEOs of Exxon and Total, say they are bullish medium term. Implicitly, they are saying they are bearish short term. Is there a bullish case for oil? Sure, but that's several quarters away. And he put 2027, 2028. Everyone is bearish right now. Everyone. Now, the markets, how do they price things? They price things in about a 12 to 18 month window before. So when I look at the oil charts, a lot of them, at least of the really good companies, they are not going down. Why? In fact, they are up year to date. A lot of them are. Because smart money's positioning. They know what comes after this. They know there's problems. So the short term, yeah, everyone's bearish as heck. I can't even tell you with certainty if OPEC is actually producing more oil and exporting more oil. I don't think they are. But we've got all these narratives floating around from the news talking about oil and how bearish it is. So then we've got parrots. Everyone's parroting the same crap. Well, it's bearish in the short term. It's bearish here. I get it. But what do the charts say? Is smart money accumulating? Are they accumulating? Are we at absolute bottoms in the equities? No, we've come off the bottoms. They've pulled back a little bit here in the short term. But they're not at bottoms. We're not at 2020 lows. We're not even at the lows that they made in April and May for the majority of the stuff. So are we going to do a double bottom back to April and May of 2025? Maybe. It's possible. Is the oil actually there? I don't know. We'll have to wait and find out. We'll have to see if commercial inventories go up or down. It says oil onshore inventories keep drawing, especially in China and Europe. Well, that's contradictory to what I just read up here. I can't make ends meet by using Twitter or news on if actual inventories are going up and down. All I read is that OPEC could produce more oil, but then we don't see it in inventories. Are they lying? Is it true? I don't know. Are they producing more oil, consuming it internally, and then not exporting it? How come they don't talk about exports? How come they don't talk about all these different inventories? How come they only show projections? Do you catch my drift, what I'm kind of hinting at here? They're saying what could be, but isn't. That's what I'll say. Here's Gary Baum on another one. It's existential, and there is no choice. The U.S. mining sector is about to experience the largest capital investment cycle in history. 15 years of underinvestment have created massive supply deficits that can only be addressed through unprecedented capital deployment. The investment requirements are staggering. New mines take 10 to 15 plus years to develop and require billions in capital investment. Processing facilities must be built from scratch. An entire industrial ecosystem must be reconstructed. The scale of required investment dwarfs anything seen in previous mining cycles. We're going to go into the largest mining cycle in probably the history of Earth. And a lot of these mines, they're smaller, they're scattered, they're not as big as what they used to be. It's going to be a lot harder here. A lot more money is going to have to be spent. So it's going to be an interesting cycle here. And we're just at the beginning of it. We're just at the beginning. Here's one from ConocoPhillips. So ConocoPhillips CEO Ryan Lance says all the bearishness in the market is not evident in the physical market. And US stocks are low and OECD stocks are not building. As far as OPEC plus additions, he said a lot of it are paper barrels. He doesn't see this glut that people are talking about. That's coming from an insider. Now, does he have better information than others? I would like to think he does. He probably sees the inventories. He probably talks to insiders that are shipping it all over the place. He probably knows it pretty well. So where's the glut? I don't know. Shale oil will start slowing down at $60 a barrel, says Total Energy CEO. The shale oil industry will begin to slow down at the crude price of around $60 a barrel, says the CEO. Told reporters on the sidelines. Our view is that from, I would say, mid-2026, the non-OPEC supply will be much lower. No growth, and then OPEC is really in control of the market. Mid-2026. That means, remember, the markets are forward-looking. They look ahead about 12 months to 18 months. Mid-2026, that's less than 12 months out. So the market, I think, is going to start looking past whatever is going on in the short term, and I can't even tell you what's going on. They're going to look past that and say, okay, let's see what's going on out there. I already talked about that one there. This is crude oil. So gold often serves as an insightful leading indicator for crude oil. He says, buckle up. So what's going on here? So gold is around 2 years in advance. So what we have is that gold was shifted in advance 2 years here. And we can see the move higher and the move higher. And then we can see how that kind of overlays for what happens here with crude oil and gold. Now, time for a bull run, in his opinion. This was 2017 to 2023. This is 2023 to 2027. He thinks because gold's moving up so much that we are going to see a potential move higher here in about 2026. And that's when we bottomed in gold, if we advanced it 2 years in advance. And then crude oil is going to move up around that time. So a big bull run in oil. I completely agree. Completely agree. Markets are forward looking. So then the bottom, when smart money accumulates, isn't based off narratives on Twitter. What they do is they look ahead and they start looking at each other. All of the smart money starts viewing each other. They're looking at each other like, are you going to buy it or am I going to buy it? Who's going to buy first at that bottom? Then they start front running all of this. And it takes about 12 to 18 months before the herd starts to get bullish. So all the smart money's looking at each other like, I want to buy, I'm going to buy. And then we start piling in. Notice I say we. We start piling in when you're really, really low, trying to fight to get the cheapest prices down there. Then all the people on Twitter who are making comments like, oh, crude oil, we're going to have this recession. We're going to have a recession now going ahead of us. It's like, okay, smart money's accumulating, guys. They know that gold moves in advance. And that's, when I made that comment a few videos ago, like really, copper's going up, steel's going up, iron ore's going up, gold's going up, silver's going up, everything's going up. You think crude oil's not going to follow that? Historically, it's always followed that. So what makes you think that this time is different? It's not. You're telling me that money comes into the system in mass, that crude oil is not going to get a bid? Yeah, right. That's like, it's an impossibility almost. Now, I can't tell you in the short term what's going to happen, but in the long term, it's going to get a bid. It says, what's the next big play in commodities? If you ask us, it's oil. The sector looks set to offer the next major opportunity. We've been tracking it for a while and plan to increase our positioning further soon. Currently sitting right at an important range low. And people are going to make fun of this. Why? Because everyone is just a freaking price chaser. That's all they are. They know the price of everything, the value of nothing. They just go chase price. Price goes up, well, that validates what I think. Price goes down, oh, that's bad. It's what everybody thinks. That you have to break that mindset if you want to make a bunch of money. You need to think when price goes down, it's good. I can get cheap shares. When price goes up, and if it goes up substantially, that's bad. I'm losing asymmetry. So I'm less likely to buy when things go way up. I'm more likely to buy when things go way down. That keeps you in cycle. And that's it. That's where we're going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials, that coupon code. I'll be releasing a midweek update. Look for that midweek update. That's the companies that I get excited about. And I buy stuff that's down, guys. I don't chase things. I beat that out of me. It's beaten out. I don't have it anymore. It's gone. That was years ago. So that's all I've got for today. That's all. We'll end it there. See you guys.